Are you tired of the stock market roller coaster? Well, I'm going to give you 7 alternative investments accredited investors are using for predictable cash flow. All right. So in this video, I'm going to break down the seven best alternative investments accredited investors should consider. I'll walk you through which ones give you monthly cash flow, which ones are truly uncorrelated relative to the stock market, and which ones are best if you want generational wealth. All right. So up first, real estate syndications. All right. So what are they? Real estate syndications are simply the function of pooling money together with a syndicator or a general partner. In this scenario, you'd be the limited partner, a person investing dollars and cents. The general partner is the person who puts the whole deal structure together, finds the property, puts the financing together, manages the property, does the whole kit and caboodle, if you will. Now you can get involved in a real estate syndication in multiple asset classes: apartments, office buildings, retail, shopping malls, just about anything. So there's a whole wide range of potential options there. And as a result of the wide range, they range from total appreciation, meaning that you are not going to get much, if any, cash flow just based on how the investment is structured and maybe repositioning a property, for example. All the way to the other side of it is just straight set it and forget it. You're just getting cash flow only. All right. So number two, private debt funds. Private debt funds, that's something we do here. And ultimately, it's a co-lending model where two parties come together, much like a syndication in many scenarios, where you've got a general partner and a limited partner. And in this scenario, a general partner, this in the co-lending situation, is a person who goes out there, originates the loans, underwrites the loans, oftentimes putting up their own money into the partnership as well, truly co-lending. And then you come in as well as a co-lender, as an investor into that collateral backed income. So in this scenario, it's all the way on the income side. No appreciation. Everything comes out as income there. You know, number three as an alternative is direct private lending. So if you like the co-lending model, you're like, cool, I like to lend money. I like income. I don't really need the appreciation, but I'd love to have steady asset-backed income. Well, private lending might be for you. You're picking individual loans. Oftentimes, you're dealing directly with a borrower in that scenario, underwriting a property, underwriting the borrower. The benefit of there is you're much more direct. You are very hands-on. For some folks, perhaps yourself, that's exactly what you're after. The other benefit is that you're getting up with a higher rate of return typically than a co-lending model because there's nobody else involved. All right, number four is direct real estate. Direct real estate. You could be in industrial, for example. Industrial has been a very hot asset class for years. It's oftentimes just a big, giant vanilla box. And the benefit of that is that users can come and go. There's a lot of versatility just having a box where it's not highly specialized, where if somebody leaves, that it's hard to go put a new tenant back in place. And that oftentimes ends up with longer lease terms compared to things like an apartment, for example. An apartment, a 1 year lease term is commonplace. In industrial, 5 years is very commonplace, but it's not uncommon to see 7 or 10 years. Number five, and this one's out there, you may not be familiar with this, are life settlements. Life settlements. Well, what in the world is a life settlement if you don't happen to know what that is? Well, not to get too morbid, but it's the purchasing of an insurance policy from somebody who is typically terminally ill. A little unique. So, for example, if a terminally ill policy person has, let's say, a couple years left to live, I know it's morbid. Let's say that is the scenario. They've got terminal cancer. They've got a few years left. They've got $1 million life insurance policy. Well, they may not want to just wait and then allow that policy to be given to their friends or their family. Or in some scenarios, they don't have family. They'd rather use the money today. And so what do? They sell that life insurance policy, sell it at a discounted value so that they can have money today and go experience and celebrate life today on their terms. So there are funds out there who specialize in this. It's truly diversified. It's truly uncorrelated returns from the stock market, but it is a very unique business model. Some people will gravitate to that. Some people who I know just stay totally away of it. but I wanted to bring it up because it's completely alternative. All right, we're going to go back to something more positive. Number 6 is farmland investing. Farmland investing. You got crop income, and then you've got appreciation of land because, as they like to say in that business, they aren't making any more of it. At the end of the day, it's a long-term wealth play. You see a lot of very wealthy families in this business. Typically, it's known as wealth preservation more than it is wealth creation, because oftentimes that land is, they're not making any more of it. It continues to sustain, hold value, and appreciate over the long term. Number 7, save this one for last because it's high risk, high reward. Private equity and venture capital play. Ultimately, you're investing, the goal is to invest in the next Google, the next Amazon, the next startup that goes from a dime to, $1 trillion in that stock market. No cash flow. All right. So this is truly speculative, and you're really hoping to find that unicorn. There are funds out there who specialize in this, and certainly you can do it as a one-off basis yourself through the towns and then wherever you happen to be. There's a whole startup arena in your city. That's how to plug into it. So 7 options I've given him: syndications, debt funds, direct lending, real estate directly. I mentioned industrial specifically, life settlements, farmland, private equity. Each one has a different risk level. They're all strong alternatives to real estate, to Wall Street and the Wall Street chaos that can be there. If you want more details, I've dropped a link below in the details that walk you through in more depth how co-lending works.